Hello, I'm Howard Friend, Chief Market Strategist from MIG Bank, and this is today's Daily Technical Report for the 10th of December 2010.
Cable has seen a reaction higher from 154.85 as a temporary oversold condition unwinds following the previous week's bearish thrust pattern, although bulls are struggling to hold above 158. While action may remain choppy over the short term, the velocity of the decline from 162.99 to 154.85 suggests completion of a major top, and I continue to expect 157.29 to 158.92 to cap for a return to the reaction low at 152.97 and then psychological 150 over the medium term as bears regain control. I'd need to see settlement above resistance at 158.92 from here to signal another crack at the 161.06 to 62.99 resistance zone, above which would be positive on a multi-month basis. Euro-dollar is working lower again after the corrective rebound from 129.69 stalled in the 133.34 to 134.47 resistance window. While action may remain choppy over the short term, the breakdown from 142.82 to 129.69 looks to have confirmed a major top, and I continue to expect the 133.34 to 134.47 region to cap prior to seeing breakdown through 129.69 for the 125.88 reaction low ahead of psychological 120 as medium-term bears regain control. I'd need to see settlement back above 134.47 from here to signal scope for another crack at 137.86 and possibly the 142.82 swing high in a more positive medium-term scenario. Dollar Swiss is settling well above broken support at 97.62 as the pullback from 100.66 swing high falters. Last week's potentially bearish outside pattern seeing good retracement. This adds weight to the basing scenario, which sees 94.62, the October swing low, as the inception point of a new multi-month advance, and I look for recapture of 100.66 to signal an attack on the 103.31 to 106.26 congestion over the next few weeks. I would need to see settlement back below 97.62 from here to again raise the spectre of seeing another crack at the 94.62 swing low, loss of which would reopen psychological 90 in a resumption of the 117.31 bear swing. Dollar Canada is seeing a good retracement of last week's potentially bearish outside pattern, suggesting basing ahead of the 99.78 recent swing low. Still, while 101.45 caps, the short-term risk is still seen to the downside for a crack at 99.30, 99.78 major support zone, the loss of which could see breakdown towards 97.10, 98.19 in an extension of the long-term downtrend. I would need to see the recapture of 101.45 from here to again look for an extension of the recovery through 102.86, 103.73 for 106.73, 108.53 as a basing process unfolds. Aussie dollar has reversed lower after follow-through buying on last week's potentially bullish reversal pattern stalled at 99.65. Still, last week's pattern confirmed an important low at 95.37, putting immediate pressure back on the upside. And while at 97.37 holds, I can't rule out another crack at the 101.83 swing high as bulls look to extend the major uptrend. In the meantime, settlement back below 97.37 would increase topping risks, with loss of 95.37, then 93.88 to 94.06 to reopen the 87.70 to 92.21 congestion as a new downtrend gets underway. Sterling yen has breached resistance at 131.74 to suggest completion of an important low at 129.34. With 129.34 seen as the likely end of the correction of the 126.44 to 134.20 advance, I look for further gains going forward, breach of 134.20 to signal an attack on 137.77 over coming weeks as a new uptrend gets underway. In the meantime, loss of 129.34 would suggest another crack at the 126.44 low, the loss of which could see a resumption of the medium-term downtrend towards psychological 120. Euro-yen is holding up well as last week's potentially bullish lower shadow buoys for the time being. This gives bulls a small window of opportunity to fail the downside break of support at 111.04, with recapture of 112.96 to suggest that a bear trap has formed, calling for another crack at the 115.66 swing high, initially in an extension of the larger move from 105.42. Failure to see this revival unfold over the next few weeks would again risk breakdown through 108.34 for 105.42 initially as the major downtrend extends. Euro sterling is working lower after the promising recovery from 83.34 stalled at 85.25. While we could see some sideways action to unwind the decline from the 89.41 swing high, the medium-term outlook remains negative after settlement back below 85.31, and I expect 85.22 to 85.95 to cap bounces prior to seeing an attack on 80.67 to 81.42 supports initially as medium-term bears gain control. Settlement back above 85.95 from here would suggest scope for another crack at 88, above which opens the 89.41 swing high, breach of which would reopen the 91.48 reaction high as the 80.67 advance looks to extend. Euro-Swiss is seeing some corrective activity from 129.32 as psychological support at 130 comes into play. While we could see further choppy activity to unwind the decline from 136.74 to 129.32, I remain bearish on a medium-term basis, as the decline from 138.34 is viewed as the early stages of the next leg of the long-term downtrend. And I look for broken support at 132.29 to cap for an attack on the 127.65 swing low, loss of which opens 125 as this major downtrend resumes. I'd need to see settlement back above 132.29 to 133.24 from here to stabilize, although 136.74 to 138.34 is key to a bullish reversal in medium-term trend. Gold followed silver into new highs for the major uptrend to extend gains on the back of last week's potentially bullish first thrust pattern, but 14.31.25 has capped the move so far as a potentially bearish reversal week forms. This suggests that a bull trap may have formed above the previous swing high of 142.460, increasing the risk on an attack on the 132.970 reaction low, the loss of which would reopen 1265 to 1300 over subsequent weeks as the correction extends. I'd need to see settlement back above the old swing high at 1424.60 to revive the uptrend, which would then target 1500 to 1519.5, a psychological level and projection target. Silver saw follow-through buying on the breach of resistance at 27.9212, then the 29.36 swing high, but the move has stalled at 30.70.5, and now support at 29.33.5 has been lost. This breakdown suggests that a bull trap may have formed above the old swing high, increasing the risk of seeing a deeper setback towards the 25.01 reaction low as the correction extends. I would need to see the settlement back above 29.36 from here to again signal a crack at the swing high ahead of the 33.71 projection target over subsequent weeks.